Good morning, everyone, and thank you for joining me in today's daily market review. This is the 3rd of February 2021, and I'm Mohamed Yaoud, Head of Market Research at CJC Markets in the MENA region. Today we have a couple of topics that we need to discuss, and we'll have a look on the charts to know what are the charts telling us when it comes to technical analysis. So please stay tuned. Welcome back, everyone, and thank you for being here. So let us have a look on the US dollar index, which is again able to extend some gains since yesterday's sessions. And basically, it is having a higher high, but again, the momentum is weak, and the momentum is not supporting this continued rally to the upside. What happened is yesterday or the day before, the Republicans Party and exactly 10 members of the Senate House from the Republican Party had a meeting with Joe Biden and Kamala Harris, his vice president. They basically proposed, instead of his 1.9 trillion stimulus package, they proposed only 600 million stimulus package, and they said that's what we can agree for. So the gap between 1.9 trillion stimulus package and only 600 billion was actually something that surprised the markets, because if we're talking about 1.9 trillion and then you only proposed this, like third of it from the Republican Party, so this gave the markets a sense of that we will not be having the 1.9. It might be reduced, not to 600, but it might be better for the US dollar. So we did have some strength on the US dollar. The markets reacted positively with this meeting, although they didn't agree on anything. It has to go through the legislation procedures, which is through the Congress, the House of Representatives, and then House of Senate. However, in the meantime, the dollar still is able to make some higher highs, and we'll be able to track today's performance or expectations through those two key levels for me. The first level is will be 91.06, and the higher one is 91.28. In case we are able to stabilize our trading below those levels, if we are able to create another lower low, we will be bearish on today's dollar trading. However, if it continued to do the same, if it repeated yesterday's scenario by creating another higher high above 91.28, we will be bullish on the US dollar for some good time, because we will be moving away from all those resistance levels. So the path of least resistance should be upward to the 91.80 points. However, we need to make sure that any break to the upside wouldn't be a false breakout. We need a confirmed breakout and a retest. So that's for the dollar index for the day. The key levels are 91.06 and the upward one is 91.28. Let us have a look on the pound dollar, which basically succeeded in staying below the levels and breaking below the upward trend line, or the lower line of the rising wedge. We have managed to stay below it and trade below it. However, the support levels that we have highlighted before at around 1.3630 succeeded in stopping this decline for prices. We are retesting, or we have retested, the lower line of the upward rising wedge, and we are declining from those levels. So basically, what I do believe the pound dollar is about to do for today, we are expecting a sideways move between those levels. That should be a margin of around 67 points, because this is a strong resistance. We have tried once and we have tried the second time, and this support zone is critical. So I don't believe that even if we're gonna break below, it's not gonna be that easy. So we will be having a decline to those levels one more time to retest it during the day at around 1.3620. Of course, any break to the upside, we will be bullish, and any break to the downside, we will be super bearish on the pound dollar for the next on the medium term, because this will be a path of least resistance of at least 100 pips. That's for the first target, and the second target is 160 pips roughly. That's for the pound dollar. We are still waiting for a confirmation either to the upside or to the downside. Regarding the dollar yen, and it's doing brilliantly in the upward trend line. Corrections, rally, and corrections. However, those rallies are still on a weak momentum. You can see the upwards trend line, or the upward moves, are not supported by any strong momentum. Momentum is decreasing from those levels. So we're expecting a reversal on the US dollar versus the Japanese yen anytime soon. However, our key reversal points should be the low for the previous low created during the upward trend, which should be this zone. This is the level that we're looking for today. Trading above those levels is still bullish, but breaking below those levels, breaking and creating a new low below 104.85 points on the US dollar versus Japanese yen will be bearish. That's our view for the dollar yen. Regarding the dollar Canadian, it's doing brilliantly, a sideways move between this resistance 1.2860 and the support 1.2760. However, some people would be going bullish or going long from those levels. This is something good because it's a strong resistance with your stops just below those levels at around 1.2730, and your target should be the other resistance zone. However, please bear in mind that today we're having some news on the dollar CAD, or news actually that affects the oil market. We have the OPEC ministerial monitoring meeting, and we do have the US crude inventories oil, or crude oil inventories. So this will affect oil trading, and this will definitely also affect the Canadian dollar. So please just stick with the money management rules, just to make sure that even if you're on the wrong side of the market, you will still not lose so much. Gold trading finally have done yesterday a good move to the downside. We had a move or a decline of around $30. We have managed to break below those important support zones that we did highlight before at around 100 and 1840. However, we're again trading above. It's a retest. Will this breakout turn to be a false breakout or a confirmed breakout? In order to confirm this, we will be getting our lowest low during this correction and the last high that the gold actually managed to create. So in order to be bearish on the gold trading, we will need to confirm another breakout below this low. Once we create a lower low than the previous one, below 1830 roughly, we will be bearish on the gold trading, because this is a path of least resistance down to $1,800. However, staying above those levels one more time and creating a higher high above 1845, this should be confirmed, or this should prove itself to be a false breakout, and we will be bullish on dollar trading to target 1860 during the day. So we are waiting for a confirmation on gold trading. It finally had some moves, and we're expecting those moves to extend either to the upside or to the downside during the day. And those are our key levels for today. Regarding the oil trading, we did see a brilliant move to the upside, which actually broke above $53.50. We're still bullish on the oil trading. However, as we mentioned, we are waiting for two important announcements today regarding the OPEC ministerial monitoring meeting and the US crude oil inventories. So we will need to watch closely what's happening in the OPEC meeting, because some countries have proven not to be so compliant with the production cuts that they did agree on December. Countries like Russia, Kazakhstan, Sudan, South Sudan, Congo, and so on, they are not so compliant with the production cuts. Saudi Arabia voluntarily reduced the oil production by 1 million barrels per day. However, we need to know exactly what is happening. Is the prices in the oil market at the moment good enough for OPEC? Will they try to reduce production? What about the COVID-19 vaccination rollout? Is it too slow to guarantee a full economic recovery? What is happening exactly with oil? We're still monitor for today. However, we are bullish on the oil trading during the day, especially with trading above those levels, $54, $53 on the US crude oil. So that was all for today. Thank you very much for joining me. That one more time, that was Mohanad Yaoud, Head of Market Research at CJC Markets. Wait for tomorrow's video. Thank you. Have a good day and please stay safe.
CJC Markets is a leading global financial institution that has granted a derivatives issuer license issued by the Financial Markets Authority New Zealand. CJC Markets has a wide range of products, latest technology platform, and eminent customer service. CJC Markets offers superior execution, competitive spreads, and low transaction costs. CJC Markets. Smart trading, smart life.